Hello everyone, welcome back to Chill Deal Trades, where I analyze stocks so you know what's going on. Today we're going to be covering Chinese stocks. I've done a few videos on this, but today we're going to actually cover some new companies, or not new companies, but I'm going to go over my favorite companies I'm keeping an eye on, and we'll be looking to add positions in the future. No technical analysis today. We'll just do covering the companies, some of the fundamental side, and then I'll do a follow-up video on all the companies covering the technical side, analyzing the charts where the prices might be headed. But if you're here and you haven't hit the like button yet or subscribed, please go ahead and do that. We're on the race to 500 subs, and we're trying to get there as soon as possible. So please do that and hit the squad. I have a Discord. You can go join that. It's in the description. And I do live streams on the weekends. Link in the description to that Twitch. But let's dive into things. So there's a lot of stocks I want to cover today, so I'm going to try to go as quick as possible. Because if you've been here a while, you know I don't like to make videos over 15 minutes. But the first thing I want to talk about is just, if you haven't heard it, I hope you have. Cathie Wood bought back into Chinese stocks. So I have I would say a hate-love relationship with Cathie Wood. I think it's cool what she's doing in terms of kind of evolving how hedge funds or funds are ran. But she goes back, flip-flops a lot. And just a couple of weeks ago, probably about a month ago, they said they sold out all their Chinese names because you can't invest in China. And yesterday they're like, actually, we've bought back in. And so I really just want to highlight the three stocks that they've bought in their fund, because what you have to realize is when Cathie backs something, it can often have impact on those names. So in her a couple of her funds, Tencent, which we'll talk about today, we're not talking about this stock, and then we'll talk about JD. So those are the three that we really want to pay attention to, that she's held on, that she's bought more of. I believe they still hold a little bit of Alibaba, but they haven't bought any more Alibaba, so that's important to know. But next, let's just go ahead and jump into the stock. So the first one I want to cover is KE Holdings. The ticker is BEKE. So this is a real estate, basically like an online real estate company. It's, I think, the largest or one of the largest in China, and they're basically a marketplace for people to sell and buy homes, kind of like the Zillow type of things of that in the US. So this is a company I've had on my radar for quite a while, but they were just really overpriced, and I've just been keeping an eye on it. I think I first found it when they were back, might have been, yeah, back when they IPO'd, I guess, last year. And I've just been keeping an eye on it and been, you know, watching for a dip, figuring out where I might want to buy in. So this is a name I really want to, I would say you suggest taking an eye on, peek at. They're still growing decently. Their growth has definitely slowed this past quarter, compared to last ones where they're growing pretty significantly, but we know that there's been some regulation happening in this place. I think much like the US, the Chinese housing market is probably slowing down a little bit. But the main thing I want to call out is their cash balance. So they have 30 billion in cash. Their market cap is 23 billion. So they have more cash than their market cap. That's insane. Another thing I want to highlight is just institutional buying. I always talk about this, but we haven't really seen any selling. And we have seen a little bit of people dip buying. So people have been dip buying since last quarter, when the stock was headed down. And now that it's dipped quite fairly, obviously the dip buying has slowed down, but we're still seeing that, which is a good sign. And some big positions here, 600 million, a couple 200 million purchases, another 200 million purchase. So those big purchases are what I love to see, and that's a really positive. On the flip side, I think things that we need to pay attention to, one is that two cities basically warned online property platforms not to hype homes. So China's already come out and said that they're looking into regulating the housing market quite a bit. And one thing that they said, that housing is for living, not for speculation. The sector shouldn't be used for short-term tools to stimulate the economy. So I think this can potentially have more downward push on this stock, but it's sold off so much that you definitely want to pay attention to it. And so that's why it's been on my watch list for quite a while, and I'm looking at it. But we want to see if there's more regulation from the CCP, because if there is, that could push some more downward momentum. But keep an eye on it. BEKE, it's looking good. It's looking tasty. So keep an eye on it. The next stock I want to talk about is JD, and the main reason I want to talk about this is because Cathie bought it. This is actually a company that they've been purchasing stock in for a while before they sold out of it. I think quite a while ago they were buying into it. And they ended up selling. Obviously, that's a pretty gnarly peak back in February. And then this pushed down to 62 bucks, which is insane. But this is what I'm keeping my eye on. I think they're definitely a healthy business. They're growing substantially. They're in the e-commerce space, kind of like Alibaba is, but some of their logistics side is a little bit different, or they kind of push into that a little bit more. But they're much smaller in terms of their market cap than Alibaba, so it's a competitor but a smaller business, so definitely keep your eye on it. And Cathie Wood buying it is definitely a big plus for JD. When we look at institutions, it's kind of similar to Alibaba. We've made lots of videos on Alibaba, so you can go back and watch those where I break down the company more. But kind of same thing. We're still seeing a lot more selling than buying, which is not necessarily a good thing. But when we go into more recently, we see some bigger sells, but we're also seeing big buys. So I think there are some people coming in and dip buying on this, which is something we like to see. Did I put this in this order? Yeah. So that's something we want to keep on and see if there's more dip buying here. Obviously, the stock has moved up pretty drastically, off that Cathie Woods move. So I'll be looking for a little weakness here. Keep my eye on it and see if it seems like it has more downside or if it's looking better. And we'll do a technical analysis chart on this. Probably next week I'll make that video with all the technical side of things for all these businesses we've covered. But very similar, like what you'll see a trend with all these big companies have ridiculous amounts of cash. And for most of them, at least the bigger companies, their cash is about half their market cap. So yeah, it still has a 22 PE ratio. I think that's a little bit high for a bear market. But on the flip side, they have a ton of cash, which does typically lower their PE ratio to something that looks a little healthier. So JD, another one we want to keep an eye on. The next one I want to cover is Alibaba, mostly because it's been hated, and Cathie Wood actually didn't buy more shares. So I made a video, I believe last week or early this week. I can't remember when I made the video, but I made an update video on Alibaba. I think it was last week. And I've made many videos, so go back and watch those. A lot of good insight. But Alibaba is the foundation of China in terms of technology. And much like Google or Amazon is for the US, there might be continuous regulation, which might, I would say, discount the stock further. But at the end of the day, Alibaba is not going anywhere. They're going to have some more scrutiny, and I think that the CCP is going to continue to put in regulation to help out the other smaller businesses to compete. JD will be one of those businesses that benefit from this, which is going to definitely put some downward pressure. That being said, I mean, just like all the other companies, I think they have like almost 300 billion of cash, which is, what is that, like a third or fourth, about a third or 3/4 of their market cap, which is pretty insane. And they're selling it at about 19 PE ratio. So still, I think a 20 PE ratio honestly is a little hot for China being in this bear market right now. But these are things that you really want to start looking at, because at some point, the US economy is going to flip and it's not going to just keep making higher highs. And when that time happens, if these stocks are still on discount, people will be flooding their money into Chinese stocks. All this things that you hear on the news about, don't buy Chinese stocks, they're unsafe, you don't want to do it, blah, 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 blah. Yeah, there's risk associated with it, and I've covered that in past videos. But as soon as we see the US market flip to not making higher highs every week, money will be flooding in the Chinese market, and it's going to push all these names higher. But yeah, so Cathie Wood not buying, not great. We also, did I bring it up? Oh, maybe I didn't bring it up. Let me bring it up real quick. So that one of the biggest negatives is just the institution. So institutions have just been selling the crap out of Alibaba. And I think that's kind of in tune with what Cathie Wood has said is, we're expecting more regulation, and we're just seeing that by the selling pressure. Like, this is an absurd amount of selling for one stock, 47 billion. You could see that a lot of firms were pretty big positions in Alibaba, and they just don't think the risk is worth it right now. Which I do think could bring some more downward pressure to out. We're seeing the selling significantly higher for Alibaba than some of the other names that we've covered so far. So that's like the biggest red flag for me. But as I said, Alibaba is the backbone of the Chinese economy, and it's not going anywhere. I already mentioned this. Okay, the next stock we want to go into is XPEV. So if you don't know what XPEV is, it's electric car company. Maybe more people who've watched this have heard of NIO. I personally am the bias that I like XPEV much more. I've done a bit of research on the two companies, and the main reason I like XPEV better is they have lower price vehicles. So I think we're heading into a global economic time where people are going to be a little more price sensitive, and we are shifting more to electric vehicles around the world, and China wants to be a main player in that. So NIO is still going to be successful, but I think XPEV honestly is still undervalued compared to NIO, and I think that XPEV is going to have more long-term upside. Much like a lot of Chinese companies, they've actually hired people from like Tesla, and Tesla saying they stole some of their IP. But one thing if you don't know about XPEV, they have a much more developed sensors on their cars compared to NIO. And so as we get more to automated driving and automated vehicles, I think XPEV is going to have the leg up on NIO. And people say, okay, NIO's expanding to other countries outside China, XPEV as well. I just believe that XPEV is much more undervalued. The main issue really with all these stocks though is their cash burn. So, you know, some people, even though the earnings came out today and we saw 500% almost in vehicle delivery, which is insane year over year, 600% almost increase in revenue, insane year over year, and their margins are creeping a little bit higher. The main negative call out is they're just still spending a lot of money to, I would say, get these sales. Let me see if we have the numbers in here. Net loss, yep. Net loss was 185 million. So this is still a red flag. That just means that they're spending a lot of money to get these sales. And as we saw, their gross margins aren't too large, and so obviously they're not making a lot on each vehicle. But I definitely still believe in this company. I think they have amazing potential. And when we look at insiders have been piling into this still. When we look at NIO, it's a much different story on insiders. Back in Q2, insiders were selling the shit out of, sorry for the language, but selling the crap out of NIO. And we've seen the opposite with XPEV. Insiders continue to pile into this because they really do see the future there. And I think institutions understand that it's undervalued more than a NIO is. And the last stock I want to get to is Tencent, because we talked about it. Cathie Wood has increased their position in it. If you don't know what Tencent is, they do a lot in everything, honestly. They have music, they have gaming, AI, kind of everything. But I think a couple things to call out here is, much like all these companies, they have a ton of cash. We don't have as much insight on Tencent as other companies, but they have a ton of cash. Not as much compared to their market cap, but still a ton of cash. And I think one of the biggest positives to Tencent is that one of the reasons Cathie Wood said she liked Tencent is because Tencent and JD are companies that are trying to make moves that the CCP will like. So Tencent is one thing, is like, we're going to donate a bunch of money, and we're going to give a lot of money to help, I think, bridge a gap in inequality in China. And so Tencent, I think, is very strategically making moves to lean on the side of CCP. So as more regulation comes out, they won't be as negatively impacted as maybe some other companies are. On the flip side, I will say that I think there is going to continue to be more regulation around gaming. China, US is, gaming is really big in the US. It's much bigger in Asia. And so I think there's going to be continued regulation around gaming. I don't think the CCP is going to kill the industry, but I think they're going to continue to put controls around it so that what they're scared of is a generation that are so addicted to gaming that it doesn't help the growth of their economy. So that's just a couple names on Tencent. And as I mentioned, I'll be soon doing a video on the technical side of things. I just wanted to put these stocks on your radar, keep them on your mind, watch for more dip buy opportunities, because eventually these are going to be, they're already kind of a great deal, but they're going to continue to be great deals. And once the US turns over, people will be flooding into Chinese names. That's all I have for you guys. I really appreciate you sticking by for that whole 15 minutes. Please like the video. I really want to know what you think of these names, and sub if you haven't already. I'd really appreciate that. Hope Hope you guys have a great day, and I'll talk to you again.